Hi again, this is your weekly market outlook. This is for the 27th of November to the end of November, basically the 1st of December. We've wrapped up the month of November. So let's take a look at last week in terms of data. We don't actually have a lot of movement in the market, but partly it's probably going to be because of Thanksgiving. This that holiday mood that's kind of kick in towards the end of the year. We do have that FOMC meeting minutes though. There's something to talk about that FOMC meeting minutes. It was a little bit vague, but I think it was a little bit more of a cautious stance coming out from the FOMC. Sure, they're still going to be saying that there's not going to be an interest rate cut. Rates could still be higher for longer, but there's no mention for any potential interest rate hikes in 2023. So I think the market is taking that FOMC meeting minutes and basically just say, you know what, I think that's a wrap for the FOMC. I don't think there's going to be any more interest rate hikes in 2023. That's basically what a lot of traders are thinking about right now. We've got the manufacturing PMI though from the US. It's still expected to, it was actually lower than 50. We had 50 last month. It actually came back down to 49.4. Market was expecting 49.9, but globally, I think apart from France, we have Germany and the UK. Both manufacturing numbers are actually up, but it was overall still below 50. Services, pretty much everything is still above 50 except for Germany and France. UK and the US maintains the position above 50. In fact, it was actually a little bit of a rise. An increase for the UK, 49.5 to 50.5. In terms of the US, 50.6 to 50.8. And that's pretty much it. In terms of other numbers from last week, we actually don't have a lot. Now, going into this week, we'll look at pretty jam-packed numbers, but I think the focus would be on the New Zealand side. We've got the RBNZ monetary policy decision. We are not expecting an interest rate hike or anything from the RBNZ. We're expecting rates to remain stable at 5.5%. In terms of numbers coming out for this week, I think the main focus for a lot of traders is actually going to be the OPEC meeting, which is going to be on Thursday. This is already a delayed meeting, and this is going to be the main focus because talks in the market right now is that I think amongst OPEC members, they're still debating on in terms of what kind of supply cut, their production cuts they're going to be employing. But we are expecting a supply cut to be a production cut. Sorry, not a supply, a production cut to be in place from the OPEC. We just don't know how big an amount that is, and I think market is a little bit jittery. And we'll take a look at the technicals. The oil prices has been going down. Could this be the trigger for oil prices to bounce off if the production cut is going to be much higher than what market is expecting? But that's basically the gist of the OPEC meeting, which is going to be on Thursday. So if you are trading oil, definitely want to focus on Thursday. It's going to be a huge event on Thursday for oil traders. Other than that, we have preliminary CPI numbers basically from Germany and France, and we're probably going to be focusing a lot more on the euro side in terms of the flash estimate on the inflation. We're expecting inflation to drop down from 2.9% to 2.7%, and for core inflation in Eurozone, expecting a drop from 4.2 to 3.9%. That's pretty much it. We wrap up the week with the ISM manufacturing numbers, and that's it for this week. Although it's actually the 1st of December, there's not going to be any NFP numbers. NFP is going to be on the 8th of December. So we're expecting a little bit more of a mellow market, except for Thursday. I think oil-related currencies, as well as oil itself, is probably going to get affected by that OPEC meeting, which is going to be on Thursday, which is the last day of November. All right, but other than that, we're not expecting crazy price movement. There's no NFP number this week. We don't actually have a lot of high impact numbers. We're probably going to be looking at the preliminary GDP numbers from the US. That could move the market a little bit. But if we don't actually have a huge surprise like 5.2%, 5.3%, I'm not expecting a lot to come in for this week. All right, so let's take a look at the currency majors. Firstly, we have the Aussie USD. Now, I think it would be the first time after a while that we're probably going to be looking at prices diverging a little bit. For the Aussie here, we're looking at that resistance where we have that order block around 66 cents. That's going to limit further progress for the Aussie here. This one here is looking a little bit exhausted. So if it continues to fail to break above that resistance one on the weekly pivot, which is still part of the order block here that we have that highlighted in blue, if the Aussie doesn't go above that level quickly this week, that would be around 66.25. We could actually see that level act as a very major resistance for the Aussie. We could actually see price getting rejected over there. We could actually see sellers come in, or it's going to be profit taking. This could actually bring price down a little bit. We're expecting a potential drop back towards 65.25 for the Aussie USD. Now the Euro USD, we have one more key resistance. That's going to be the buy side liquidity that you are looking at there. It's at 1.0950, and that's basically been the resistance for last week, and this is going to be the same resistance for this week. Momentum wise though, I think the uptrend is pretty much still intact at this point in time. We do expect price to slow down a little bit, but for now it is actually very well supported at 1.0850, 1.09. Now last week we talked about that level. We saw price move to that level and bounces up. We are right now waiting for that break above 1.0950, and I think we should have enough momentum to continue to break above 1.0950 at this point in time. We are trading above the weekly pivot. We could potentially see a return towards 1.10 and potentially even 1.11, where the resistance 3 is currently located. Not expecting crazy movement, but that's kind of the limit on how far the Euro USD could go. So, but judging by how we look at the Aussie USD and the Euro USD, we're looking at a potentially weaker, or at least a lot weaker Aussie compared to other currencies like the Euro as well as the Pound. So Euro USD, we still have a little bit more strength left over here for the Euro to potentially break even higher. Now Pound USD, this one had a jump start on Friday, broke above 1.2550. We have created a new high at this point in time. We are estimating this to be around 61.8, 78.6% in terms of retracement so far. We have surpassed 1.2550, and 1.2550 is going to be the immediate support level for this week. That's also where the weekly pivot is located. In terms of resistance to the upside, we're probably going to be looking at 1.2650, but ideally what we are eyeing for, a lot of traders are actually eyeing for 1.27 and 1.2750 on the Pound USD. Now, judging by the momentum that we have on the RSI, the uptrend is pretty much still intact. We're expecting further progress to the upside. We're expecting a stronger pound this week. I think the move to the upside is likely going to continue. Now, for the Japanese yen, this one here, you can see the RSI at the bottom there. It's still pointing to the downside. So we're actually looking at a little bit of a weaker dollar yen at this point in time. And now, resistance wise, you can take a look at the movement last week. It was actually pretty much capped at 150. And we actually have a change of character as well. Last week we actually created and break a new low, still well supported at 147.50, 148 level. That's going to be the stronger support level, but at this point in time we're also being capped by 150. So as long as price is trading below 150, we're still expecting the Japanese yen to get pressured to the downside. We're expecting a return towards 148, but ultimately we are eyeing a return towards that weekly support one, pretty much at 147.70. It's still going to be within that range of that red rectangle that you see there. That's pretty much between 147.50 to 148 for the Japanese yen. So expecting a little bit more of a weaker US dollar at this point in time. Now, obviously, taking a look at the numbers this week, we don't actually have a lot of key drivers for the US dollar except for the preliminary GDP numbers. So anything above 5%, that's going to be a surprise to the market, but we're not really looking at a huge gain in terms of the GDP numbers, because we're looking at an estimate from 4.9 to 5%. So we're not expecting crazy numbers for this week. At least for the US economy, we know it's strong, but we're not expecting crazy GDP numbers like last month as well. So with no more surprises at this point in time. And again, there's not going to be NFP this week, so I think market's probably going to save it up for next Friday, which is on the 8th of December, where the NFP is going to get released. So that's pretty much it for this week. I think that we're expecting probably more of a mellow market at this point in time. Trends are pretty much still intact. We're expecting the EURUSD and Pound USD to continue to gain. We're expecting a Aussie USD to stall a little bit. It's going to be range bound to 65 cents to 66 cents. The dollar Japanese yen, we're expecting this one here to get pressured even lower back to 148 and potentially 147.50. But that's pretty much it. So don't expect a lot of positive correlation amongst all these currencies. We're expecting prices to kind of diverge a little bit. So with that, good luck to trades, and I'll see you soon.